if money were tight, you wouldn't have stocks making new highs. You wouldn't have cryptos making new highs. You wouldn't have the gold price making new highs, and you wouldn't have a relatively strong dollar. So, in my view, the cost of money has gone up, but money is not tight.
Hello and welcome back to Soar Financially. Thank you so much for joining us here on this channel where we discuss the macro to understand the micro. My name is Kai Hoffmann. I'm the @JR Mining guy on Twitter and the CEO of the Soar Financial Group. Really appreciate you joining us here for a really interesting discussion because we have a first-time guest joining us. It's Dr. Marc Faber. He's the editor and publisher of the Gloom, Boom, and Doom report, and I'm really looking forward to this discussion because I've seen Mr. Faber down in Zurich at the Precious Metals Summit the other day, and I'm really excited to be catching up with him now. Let me bring my guest onto the screen because I have a variety of topics prepared for him and lots to go through. Dr. Faber, thank you so much for making the time.
Well, it's my pleasure, and good day to all your viewers and listeners.
Fantastic. I really appreciate it. Thank you so much. I know we're a bit tight for time. Let's jump right in because you're in Thailand. It's already in the middle of the night for you. So I really want to be conscientious of your time there. And I want to start setting
of the night.
the beginning of the night. What time is it? It's probably 9 p.m. your time.
9 p.m., yes.
Yeah. Okay. Now we'll make this short and sweet and pack a lot of information into this. But let's start out with setting the scene a little bit. I think based on your answer, I'm sure we'll have a lot of talking points to jump off on. And it's how is the economy doing globally right now? How are the financial markets? And let's start there, and then we'll dive into a lot of the details.
Well, we have significant divergences in the world, both in financial markets and in economies. The Chinese economy is not doing well, but maybe not as badly as Western media describe it. And the financial markets, as you know, the FANG and related stocks, semiconductors in the US have performed superbly, especially AI related, and emerging markets have by and large performed poorly, with few exceptions. And the US has since essentially 2015, and in some cases since 2009, grossly outperformed foreign markets. I would expect at some point that there will be a reversal. So if we talk about the global economy, it's like talking about a local economy. Some people are doing well and some people are not doing particularly well. That I can assure you.
Absolutely, yeah. And, you mentioned, I think your first sentence was that the West reports differently on the East, and it's one of the questions I noted down because you're based in Thailand, Dr. Faba, and I'm curious how different that reporting is. Like, what is your perception? Because of course, I'm based in Germany. Our reporting is very biased, so I'm curious what your thoughts are.
Well, my view of the mainstream media is that it's a complete lie what they tell the public, and that the media is owned by people that have close connections to the government, and there's sort of a spokesperson of the government. And I completely object to the mainstream media views of how they report the news, also how they portray, say in Germany, the AfD. They call them an ultra right-wing organization, when in my view, for my perception, I wouldn't join the AfD because they're too left, or same in Switzerland, SVP is too on the left wing. For my view of the world, I would be the right wing extremist.
What are some of the topics like coming to the economy that really that you're focusing on? I know you publish a monthly newsletter. what are some of the topics you spent the most time on researching these days? Like, what are the most important to you?
Well, corporate profits are important, and especially in view of the interest rate policies that we have. As you know, interest rates have gone up, but the question is money tight or not? Because if money were tight, you wouldn't have stocks making new highs. You wouldn't have cryptos making new highs. You wouldn't have the gold price making new highs, and you wouldn't have a relatively strong dollar. So, in my view, the cost of money has gone up, but money is not tight. And this has been discussed in the economic literature, and you can see it yourself. If you go to Turkey, the rate of inflation is around 100%, and interest rates are thereabouts as well. But money is not tight. The absolute level of interest rates will not tell you whether money is tight or not. There are other symptoms that will tell you that money is tight. Money is tight when markets go down and when the VIX index soars, and when spreads between junk bonds or high yield bonds and treasuries widen significantly. So by this definition, money is not tight. Now, I do not dispute that for some industries, money is tight. Say you own a commercial building in Los Angeles, New York, Chicago, and San Francisco. It may be difficult at the moment to get a loan. You may get a loan, but at a lower value, building value. But if you want to go and speculate in stocks on margin, there's no problem whatsoever.
Now, interesting. Like you bring up commercial real estate, and that's one topic I've been following quite closely as well. Because I'm German, you're Swiss, so I'm sure we're always looking for the negatives and the straw that breaks the camel's back. And in this case, the markets. Commercial real estate is key, I think, as well. Is that the straw that could break the camel's back? Like we see glimpses in the media, but it's not as highlighted as it maybe should be.
Well, it's not highlighted for the reasons I outlined before, that the media is very biased. But the commercial property market is not a huge deal within the economy, or compared to, say, the stock market value in America or the bond market value. A more significant problem would be if the highly inflated home builders market would fall apart, because home prices, residential home prices, have gone ballistic. And if they came down, then many households would feel the wealth impact of the decline in home prices, and many people will lose their money because they have large debts, large mortgage debts on their homes. So I don't think that the commercial property market is a huge issue. Moreover, macroeconomically seen, say I rent my office, nothing would be more advantageous for my business than a decline in property values and a decline in my rental expenditures, because my rental expenditures is relatively high.
Mhm.
Now in Thailand, I own the property outright and no debts. So there, anything happens, it doesn't concern me. But say in Hong Kong, where I have an office, if the rents came down, it would be a mild advantage for my business.
Okay, no, that makes sense, and I can follow that. You brought up inflation. I think that's a really important and big topic as well in the context of tight money. And we had a long period of free money essentially, and now we're in a environment where money is a little more costly, but it's still relatively cheap in historical context, where people complain about 5%. But if you look at the interest rates in the past, 5%, people would have laughed at it, right? Because they
Yes,
financed and mortgaged their houses at
correct,
13%. So
correct.
have we beaten inflation? And like, we need to be more realistic here, in my opinion. Like, what does the new normal look like that we need to get used to?
Well, in my view, given the large deficits that governments have, and given the large debt explosion on the government side, in other words, over the last 10 years, government debt has grown everywhere much more rapidly than GDP. Germany is a bit of an exception, but all the other countries' debt has exploded relative to GDP and is now very high. Also, considering the quality of government officials we have, the so-called bureaucrats, they're so horrendous that for sure they will continue to pursue inflationary policies, beginning with increase in salaries of government officials. They want to fight inflation by giving salary increases to just about everyone. And that then spreads through the economy and it increases the purchasing power of people. Maybe not as high as the rate of inflation is. That's why, in real terms, inflation adjusted, people earn less. In other words, the standards of living of the typical family in Germany, in Europe, in the US. I'm talking about the typical family, not Jeff Bezos and Elon Musk, but of the typical family. Their standards of living are going down because the cost of living are going up more than their salaries.
Like, I'm in Germany right now. We're seeing labor action pretty much daily right now. Walkouts from the Deutsche Bahn, meaning our train operators, or Lufthansa employees are walking out. So I'm curious, like, based on what you're saying, like, striking for higher wages is actually putting them more in a downward spiral, because prices are going to explode, inflation is going to stay high. So they're actually not achieving anything. It's a zero-sum game.
No, they're making things worse.
That's what. Yeah. Okay.
And I have an advice for all people who go on strike. Go on strike forever until the German government, in its present form of socialists and green communists, is removed. As long as these people stay in power, the country will go downhill, in a downhill spiral, economically speaking.
Yeah, we're seeing that right now. I think our GDP is shrinking on a monthly basis. Energy costs to blame for that as well, which are the highest in Europe, pretty much, or in the world even. So definitely a disadvantage, I would say. Right? That's
Yeah, that's just about the
it's a
highest
small,
in the world.
very small disadvantage there. Right? Like, I think that brings me to the recession debate, because Germany officially, like, or unofficially, is in a recession. Officially, I think we skirted it last year, but I think by now we should be in a recession. The EU is definitely in a recession. The UK is in a recession.
The
And again,
statistics
like,
are all doctored by the government, and the offices that publish the statistics are controlled by government officials. So they will always make things look better than they are in reality.
no, one thing I've noticed, though, Dr. Faber, is like nobody really talks about a recession here in Germany, at least amongst friends. Like, when I go to the market here on a weekly basis and catch up with friends, the recession is not a topic. And I'm wondering why that is. Is it
It's
really?
politically incorrect. Anything that is inconvenient, you don't talk about it anymore. You understand? If some immigrants kill someone, they will not mention that it's someone from Africa, from the Middle East, from wherever. They will say a person.
No, that's I've noticed that in the reporting as well, and it's a bit frustrating to witness, to be quite honest. So, you talk in one of the articles you've posted recently about silent depression as well. And the depression is, of course, a very severe recession. I think it's over 10% contraction in the economic activity. Where does that apply? And where do you see that right now?
Well, the question is how fast do the standards of living go down? You understand? When we talk about the depression of the 30s, within 2 years, there was a remarkable economic and financial slump. In other words, stocks collapsed, high yield bonds collapsed, banks collapsed, and the people lost their jobs. In other words, the unemployment rate went close to 30% in the United States. The governments have learned that if you have excessive debts, the only way to come out of this debt problem is either you increase taxation significantly, but that is difficult in the current economic environment, but it would be possible. But the problem with tax increase is usually it hits the lower classes and the middle class the most, whereas the rich people, they can avoid paying taxes to a large extent. The second way to deal with debts is to default. That is also very difficult because you have local creditors and international creditors, and it's very messy. So the third option is to inflate. And here I have to explain very distinctively, inflation is nothing else than a tax. This tax arises because the government expenditures are larger than the government revenues, and so a deficit occurs, which usually is then financed by a central bank. In the case of the US, the Fed, by printing money, and in Europe by the ECB nowadays. But it's a tax, and someone pays this tax. Unfortunately, this tax is a very unfair tax. It hits the lower classes and the middle class much more than the wealthy people. The wealthy people frequently benefit from inflation because it leads to a concentration of wealth in the hands of a few people, and so forth and so on. And people who are born and inherit assets, real estate, stocks, bonds, commodities, and collectibles, paintings, and so forth, they benefit from inflation, basically. So this is an unpleasant tax, and it lowers the standards of living of ordinary people. And by the way, since you're in Germany, you should all read the book by Bresciano Turoni, Constantino Bresciano Turoni, The Economics of Inflation. This is a very important work. He wrote this because he's an Italian economist, but he was working at the Reichsamt in 1918 to 1924. This is the title. The Economics of Inflation. That is the author here.
Yeah, Constantino Bresciani Turoni.
That discusses everything about inflation, how stocks perform, how inflation accelerates, how the currency market moves, what the value of the currencies against gold, what the value of stocks are against gold, and what wages are, and the social impact and the economic impact in the domestic economy, and so forth and so on. This is the Bible of inflation described by a contemporary. In other words, he lived through it. Not like the Bible was written about 500 years or thousands of years after things had happened and nobody remembered precisely.
But like, since you've read that, and of course, so it's really applicable, eh? So you really see parallels to back in 1918, like to what we're seeing right now.
Well, not yet, but I can tell you. In 2008, when Bernanke introduced QE1, I observed this is not QE1, this is QE infinity. Because once you embark on money printing, it's very difficult to stop it. And this has been described in the economic literature by Hayek and Mises and all these great economists, except Federal Board members, central bankers don't know how to read a book. That is the problem.
Tend to agree with that. I tend to agree with that. History tends to repeat itself. So I'm really curious, like, the fight inflation then is like we've had inflation at 8-9% with the official numbers, of course, just recently. And if you were to inflate away the problem, you would need like 8% inflation over 40 years to inflate away the debt, for example, if no new debt would be added. I think that was a number I read about a year ago or so, right? But it just gives you a bit of context of time.
Repaid. The debts will never be repaid. But the servicing will become a problem and has become already a problem in the US, in the sense that the debt was growing since 1981. But as interest rates fell, the interest payments on the debt never really went up. But for the last 2 years, that interest rates have gone up, the payments of interest on the debts are becoming a problem. But now you see why the central bank has an interest to say that inflation is, say, 6% or 7%, when in fact it's maybe 8-9%. And I just like to remind your viewers to also look at long-term charts of interest rates and inflation of what happened in the 1970s. The model of the 1970s would suggest that we are now at the very beginning of an inflationary spiral that will last for maybe 20, 30, 40 years.
I was going to ask you, like, for your outlook on inflation. If you believe Paul Krugman, we've beat inflation, of course, which, in my opinion, it's sad to say is a joke, and I hate to disagree with Nobel laureates because they're usually smarter than me. But in that case, I disagree. So your outlook for inflation, like, what is the scenario? Because it is spiraling out of control. We need to print more money to service the debt. It's $1 trillion in service payments in the U.S. alone, for example, right? So what is the exit strategy almost?
Yeah, I told you before, default, tax increases, or printing of money. And the easiest, and every government has done the same, they printed money. And by the way, I would not rate someone who receives the Nobel Prize as smart. He may have written a nice paper or whatnot, I don't know, but I wouldn't rate someone like Mr. Obama, who got the Peace Nobel Prize, as smart.
That was a controversial one. I do have to agree with that.
And
that was a controversial one.
And Krugman is interventionist. He's a central planner. In a perfect world, he would plan the entire economy and there would be no free market. That is Krugman's main Keynesian view of the world.
Dr. Faber, I thought about a question I thought about asking as the very first question for our discussion. And I opted for the generalist question about the economy, but the question would have been, do you see the possibility of a global financial market reset? And you answered it with, or you touched on it, but the valuations are so out of control on most asset classes that a reset is almost mandatory to get back to somewhat normal price levels where, like you mentioned, I think in one of your letters, like you could actually afford a painting with 3 annual salaries or yearly salaries, and now that painting is completely inflated, out of control. It's impossible to actually buy it as a normal person, right? Like those like price comparisons, right? Like, do we need a financial reset to get back to normal, and what could that look like?
Well, I don't know how the normal will look like because the governments do not seem to be very normal. But let's put it this way. Given that, as you say, that I 100% agree with you, that most assets are highly valued. In a bubble, to say that they're overvalued is difficult because they could go up in nominal terms and decline inflation adjusted. But as you say, asset prices are very high. Now, the Fed has a slight problem, and the Treasury, with the commercial real estate market. The property market, the single home market, is even more overvalued than the commercial property market was. Now, they must be concerned that the housing bubble bursts. And they must be concerned, as you say, when I started to work, assets were cheap in 1970 and salaries relatively high. Now assets are high and salaries relatively low. Say, when I started to work, with 25 hours of work, I could buy a Dow Jones. Now someone, worker, he would need 150 to 200 hours of work to buy a Dow Jones. But since he cannot save because his living costs have gone up so much, he can never buy a Dow Jones. So that is the problem. But the Fed, I'm sure they are concerned about the asset market. If the stock market drops 10%, I'm prepared to make a bet they'll cut rates.
That's the other thing as well. Maybe we can touch on that topic as the last one before we touch on commodities and gold, because I really want to pick your brain on, of course, the recent gold price move. But the Fed is signaling a rate cut, and the question is, like, what does a first rate cut really mean, as it symbolizes as well? Because it would show that the U.S. economy is maybe not as strong as people might perceive it to be, and what is sort of the ripple effect from an initial rate cut?
Well, we don't know because the market is a discounting mechanism. In other words, the high valuations we have today are based on the expectations that rate cuts are coming. Now, we may debate, are the rate cuts coming in March? Most unlikely, but likely maybe in June or September or December, whatever. But the market expects rates to be cut. But I am not sure that they should be cutting rates, given that we have an accelerating inflation trend. Now, I'm not ruling out that if inflation, like in Germany, went to 9%, and now we're down now maybe to 3%, 4%. But the fact remains, today in Germany, prices are about 25% to 30% higher than they were in 2018, 2019, prior to the price explosion we had in the last few years. But the central banks, they only look at the current rate of inflation. They don't care about what happened in the past. So if inflation now is for a year at 3% or 2%, they may cut. Also in the US, at the moment, inflation is maybe 5%. I think it's higher than 5%. I think it's between, say, each family has a different rate of inflation. But for the typical family, it's between 5 and, say, 15%, depending where they live, how many children they have, how much insurance premiums they pay, and because the service inflation is going up strongly at the present time.
Also, energy cost, depending on what state in the US you live in, is very, very different. If you live in California or in Texas as well, there's a steep drop off, of course. And Dr. Faber, I could discuss economic policies with you forever, but we need to talk about commodities, and I need to talk with you about gold.
With me, you shouldn't discuss economic policies Because in the 19th century in America, as you know, this was the time people moved to America. Fortunately for the country, they didn't have any economists, and they didn't have much central government. Government expenditures in the 19th century, the federal government, was never more than 3% of GDP. So as a result of no economists, no economic policies, the country expanded very rapidly, and the standards of living went up also for the workers, because for the workers, they had bad living conditions and working conditions. I agree. But because of the construction of railroads and canals and electricity and everything, the transportation costs went down, and you could buy meat in New York that was slaughtered in Chicago or Abilene or wherever and ship it to New York, and the cost was much lower than what the local butcher was charging. That is the key to capitalism, that it lowers the cost. And government interventions, especially when done by complete ignorant people and incompetent people, like in Germany, increases the cost for the entire populations and impoverishes the population. That is the problem.
Absolutely. Managed capitalism, I think,
And it's not Putin. It's not Putin. It's that the government uses Putin as an excuse to push through legislation and all kinds of regulations to increase the cost of living of ordinary people.
Yeah, we're seeing that here. The electricity bill is the number one example I keep coming back to. Absolutely ridiculous.
Yes.
Dr. Faber, we need to talk about the recent gold price move as well. And I'm curious to hear your thoughts on why did gold jump to a new really record high here? What pushed prices higher? I'm really curious. I have to admit, I'm a bit dumbfounded. I'm not a technical analyst, so I'm curious if there was a macro or fundamental reason that pushed gold prices higher. I think we can all agree that everything points to higher gold prices, but I'm curious if there was a certain event or indicator that pushed gold prices higher just over the last week.
I don't think there was a catalyst really to push the gold price higher. But as I said, money is not tight. And when NVIDIA goes into the sky and cryptocurrencies go up ballistically, some money then sells these assets that go up strongly, and they look for something relatively safe. And they also gradually come to the conclusion that the governments will continue to print money. It's an election year in the US. The Fed is not a friend of Mr. Trump, that I can assure you. They will do everything to get the Democrats reelected. And so, in my view, it's likely that the Fed, whatever the conditions are, will keep money easy. Now, it could be that interest rates don't go down, but they can supply liquidity to the markets to keep the markets up, or even supply more liquidity to push markets up so people feel good and they vote for Biden.
No, absolutely. Yeah. What is it? Close to $2,200 an ounce right now. So it's trading at a very high level. The question is gold in a bubble?
Well, a high level is difficult to tell and to determine. Now, I take an example because I grew up in the 50s, so I can say how much a croissant was in 1950 when I went to school. It was 15 cents, and now it's maybe 2.50 or 3 or whatnot, and how much a coffee was. I remember we went on Sunday nights because my mother was working, so sometimes we were alone at home. My brother and I went to a local restaurant, and for 5 francs 50, we had a full menu, starter, main dish, and dessert. And now the same meal would cost, I don't know, 50 francs. So up, say, 10 times in Switzerland. In America, it's maybe more. But the gold price was at $35 in 1970. It's now 2,000. So everybody complains that gold hasn't done well. No, it's done actually quite well. It has kept its purchasing power. And that's why I hold a large gold reserve in physical. I don't hold gold because I want to make money, but I hold gold to preserve my purchasing power. And also, I'm at an age where the life expectancy has diminished. So
So you
anyway,
don't own mining stocks, I guess.
I also now this because you said we will talk about investments. I prefer physical gold, but I can see that gold miners are not only extremely depressed against the S&P, they're also extremely depressed relative to the price of gold, silver, and platinum, to the physical price. And so for a long time now, I never increased. I always hold some gold shares because I was on the board of several mining companies until they kicked me out. But but now, for the first time, I'm buying again some because especially South African gold mines are incredibly cheap because both South Africa is in the dumps and the mining sector is in the dumps. I mean, Nvidia, Apple, and so forth, they're worth more than the entire mining sector in the world.
Absolutely. No, it's interesting. So are gold mining stocks or mining stocks in general the biggest contrarian bet you can make right now?
Well, there are lots of things. You know, the Hong Kong properties are very cheap, the property stocks. The property will continue to go down. But the property stocks also in Singapore, many companies sell at a 70% discount or 80% discount to asset value.
Oh, wow.
Now, even if the asset value goes down another 30%, which is possible, the stocks at the 70, 80% discount to asset value are relatively inexpensive. And then Latin American markets are inexpensive. You know, you can buy stocks in Colombia, Brazil, Chile, Argentina, not expensive. And even in Europe, there's some stocks and some real estate that is inexpensive.
No, fantastic. Hey, Dr. Faber, I tremendously appreciated our conversation. We could have discussed the economy. I had so many more questions written down, but I know we both have a bit of a hard stop here as well. So I truly appreciate your time. Where can we find more of your work? I think it's, the Gloom, Boom, and Doom Report.com.
Yes, gloomboomdoom.com. That is my website. I have to reports and so forth. So I'm not in the marketing business.
No. Tremendously appreciate your time. Really valuable insights, and hope to have you get back on the program here in a few months so we can sort of track a bit the developments in some of the contrarian investments, and of course developments overall in the markets, because there's so much going on. That's what I meant. I could have easily chatted with you for another 2 hours because we barely scratched the surface on some of the topics. So
hopefully the Greens and the socialists will be out in some countries. At least the Portuguese, they've taken an initiative. They kicked them out.
Yeah, I just read that this morning as well. They had elections over the weekend as well, and there was a bit of a shift back to normal. Fantastic. Hey, Dr. Faber, thank you so much for your time. All the best.
My pleasure. Thank you very much.
We'll catch up very soon. And everybody else, thank you so much for tuning in. I hope you enjoyed this conversation here with Dr. Marc Faber, first-time guest on the channel. And let us know what you think. Did we ask the right questions? Did you get the right answers? And make sure to hit that subscribe button as well. Leave a comment, leave a like. We truly appreciate it. We'll be back with lots more this week. We have David Hunter joining us and Michael Oliver. So make sure to subscribe to the channel to not miss any of our conversations in the future. Thank you so much for tuning in. We'll be back with lots more.